Thursday evening. My name is Ann Zane, and I'm currently a rising senior at Rochester Adams High School, as well as the Vice President of Michigan Youth Empowerment Foundation Leadership Committee. The Michigan Youth Empowerment Foundation is a 501c3 nonprofit organization that is dedicated to promoting STEM education, as well as helping K-12 students in their ventures in this new technological world. Welcome to our third Be Live seminar, co-hosted by the Zhejiang General Chamber of Commerce. Our theme today is stock investment for the youth. We're honored to have our distinguished guest speaker, Professor Liu of the Zhejiang General Chamber of Commerce from the City University of New York. He has taught investment and financial statement analysis for a few years. If you have any questions during the presentation, feel free to leave a comment in the Q&A section, which can be found at the bottom right corner of your screen, if you are on a computer, that is. Please join me in giving a warm welcome to Professor Liu.
Hi everyone. I feel very honored to see all the students here to check the stock investment with me, and I also appreciate this chance with Grace and Anne to study the other topics in these online webinars. So today we will study something about stock investment. So I've teaching the equity analysis for a few years, and especially in the financial statement analysis. And I holding my CMA certificate, and I'm also pursuing the CFA certificate. So today we will talk something about stock, right? I know recently many students and many family want to buy the stock because of the pandemic, right? So we stay at home, we're working from home, and our regular income is shrinking. However, we can still enjoy the recovery of the financial markets, right? To get this upside, potential chance to get some return. So what is stock? And I may wonder, have you get any background information of the stock? And I think you heard stock a lot, right, on the Wall Street news, right? So what is a stock? So I got a question from the FINRA. So that's a question asking you, right, if you buy a company stock. So for the following choice, which one you can choose? Can you choose the answer? You can choose the answer in the Q&A sections, right? So let's say who will choose the 1, 2, or 3? Okay, so Kyle already answered, right? So if you buy a company stock, you actually own a part of the company. It's the right answer, right? So it means if you're holding a stock, you actually have an ownership of the company. For example, if the American airline issued 100 stock, right? They want to do some expansion, so they want to borrow money from the public, right? So they issued 100 stock in total, and then you purchase the 4 stocks, right? So it means you actually holding what? 4% of ownership of the company, right? So that's a common stock means. If you're holding one piece of stock, you're actually holding one slice of the company. So if the company generate income, right, they must to pay the income as dividends to the stockholder. So financial stock, right, is financial instruments, right? How we can buy and trade in a stock is in a stock market, right? So market is a place to buy and sell the stocks. And then we have the 2 types of the stock market, right? One is the primary market, one is the secondary market, right? What is the primary market? I mean, you guys maybe purchase a new car, right? And we buy the car directly from the dealer, right? Or you can say from the car companies, right? So on the primary market, you buy the new stock issued by the company directly from the company side, right? So we have the underlying, investment bank help this company to sell the stock, right? So this one called initial public offering, right? IPO, right? You see the IPO a lot, right? So it means you buy the new shares from the company. through the primary market. Once the shares are trading on the market, right, on the New York Stock Exchange, for example, then this stock is not new anymore, right? It's called our what? Called our secondary market, right? Called secondary market. Means you buy the stock from the other investors, right? You do the trading with the other investors. You not buy the company directly. So most individual investors, we buy what? We buy the secondary stocks, right, from the other investors, right? If you want to buy the IPO, you must have a sufficient fund, right, in an investment bank. Most company require $500,000, right, to buy the IPO. For example, the Alibaba, right, the ticker is the BABA, right, BABA stock is used to very popular for IPO, right? So they request, if you want to enter into IPO, you must pay what? $500,000, right? But IPO price is very cheaper than the price after IPO. For example, Alibaba's IPO price is only what? Only $40. But once the BABA go to the public, right, the next day, the price surged to what? $90. So almost doubled, right, overnight. Now the price is more than $220, right? So if you purchase IPO of Alibaba, you can enjoy more than 5 times growth, right, within just a few years. It's a quite good return, right? So now let's say something, why we want to buy the stock, right? There are so many different investment choice, right? If you go to the Wall Street or maybe go to a financial advising company, there are many financial instruments, right? So why we need to buy the stock, not buy the others, right? Let's say some comparison, right? So over the last 20 years, what's the best performance among these choice? We have the stocks, bond, right, foreign exchange, and also the precious metals. Among all these financial instruments, the best one actually is what? Stocks, right? So let me show some performance of the real market here. Since the 1926 to 2019, last year, you can see our performance of market is very, very good, right? So you can see in the past 90 years, right, our stock generate what? 12% return each year, right? Not total return, means every year, on average, small stock, right, increased by 12% per year, right, since the 1926 until now, right? If you keep holding the stock for this time period for long-term investing, you can enjoy 12% return every year. What's the power of these compoundings? Let me show a secret formula called what? Rule of 72. So this is a financial formula to help us to determine how long it will take for your money to double, right? You don't need to use a financial calculator to do these calculations. The calculation is very easy. Just use 72 divided by interest rate or return rate to calculate how many years for your money to double, right? For example, if you put the money in a bank for 4% interest rate, then use 72 divided by 4 is 18. So every 18 years, your money will be what? Will be doubled, right? So based on our previous slide, right? You know our small stock generate what? 12% return, right? So use 72 over 12 means what? 6. So every 6 years, your money will be what? Doubled, right? So from $1 to $2 to $4, right? That's a 2 raised to the power, right? Based on how many cycles you have, right? So you can say for the whole durations, 90 years, right? 90 over 6 will be 15 times. So your money will be, doubled every 6 years, right? For 15 times. That's why you can say $1 investment can now becomes what? $40,000. That's the power of what? Stock return in the past years. And then you may wonder why the market will continue goes up, right? You see many financial crises, right, in the past decades, right? We have the global financial crisis, right? We have internet bubble, right, on the 2001st, right? So why our market is still going up, right, with the upside and down, right? And we can see the market continue go up, right, with the recover very soon, because where the new company always replace the old companies, right, in the stock market. For example, for all the big companies right now in the stock market, like the Google, Amazon, right, and Apple, all these companies emerged in the last 20 years, right? You cannot imagine, 50 years ago, with these technology companies can be such popular right now, right? So with the new company replace old companies, right? Our stock market continue goes up, right? That's the power of what? Technology, and that's the power of our economy, right? So if we believe our country, our economy will continue goes up with the new technology, right? With the new, governors, right? We can still have our return, right? Appreciated every year. Okay, so now let's say something how to measure return, right? We see from the, the compounding growth of the market, right? The high return can give you a high balance eventually. So how can we measure return, right? I mean, if you actually purchase stock, right, you will be very sensitive to the numbers, right? If you have a, a poor return, right, means your account will be increasing very slow. However, if you have a high return, right, your money and the retirement will be such a huge number to enjoy, right? So how to measure return? Let me give you some real numbers, right? Real examples, right, in the financial markets to see how can we measure return. For example, you spend $10,000 last year, right, on September, right, to purchase what? Apple stock. So what's your total return right now, right? Just the day before today, right? So last night, right, you check the balance. What's the balance in your account? So how can we check the Apple stock price and your home, right? You can go to what? You can go to the Yahoo Finance, and you can search for the ticker AAPL. That's for Apple companies, right? And you can see that's the company page for the Apple stock. And below these tickers, there are many columns available. We will go to the historical data, right? In the historical data, you can get what? Daily price for the Apple, right? This is the opening price. This is the closed price. What's the opening price? That's the price on what? 9:30 a.m. when the market opened, right? And what's the closed price? That's a 4 p.m. when the market closed. What's the price left on the screen will be the closed price. And the highest, the daily highest price during the transaction. Low means the lowest price, right, for the whole day. And you can see these 4 columns. If you go to these historical data columns, you can download to Excel sheet if you want to do the calculations. Use Excel, right? It will be more convenient. Let me show how to solve what? Solve the return, or to check what's the balance after, these 9 months, right, in your account. So when you purchase stock on September last year, right, you bought the stock at what? $205, right? When you check the balance last night, right, the price is what? $360.06, right? So what's the return? Don't forget, when you purchase a stock, right, you also receive what? Dividend, right? If I change the frequency from daily to the monthly, you can also capture what? Dividends, right, for the stock payment. Right? You can say Apple stock pay the dividends every quarter. So every 3 months, you can receive 1 dividend, right, for your every share of the stock, right? So for 1 share of Apple stock, you receive what? 77 cents, right, on November, 77 cents on the February, and the last dividends are paid on the May for what? $82, 82 cents. So what's your total return? Well, including the 2 parts, right? The first part is the price change. The other part is what? Dividend income, right? The price change is from the 205 last year to this year's $306.6. So your total price change in the percentage is what? 48.79%. And also you can enjoy what? Income yield from the dividend, right? Like I mentioned at the beginning of today's seminars, right? We are the common shareholders. We own the companies, right? So if a company generates the income, they must to pay what? Dividends, right? So you can say you have the 2 sources of the return. Once the capital gain, that's the price change. Once the income yield from dividends. Based on these two sources, we also have the two types of investors in the market. One investors, right, is try to follow capital gain to buy the stock, right? They want to buy some stock at the young stage and hoping the price will moving up, right, in the following years. Right? So they are focused on the capital gains. Some investors, for example, one of my students, right, he tried to buy what? Buy the penny stock. The penny stock is the stock, the price is very cheap, right? But they pay dividends every quarter. And this price is very stable, right? But they can enjoy what? They can enjoy dividends. Those for these guys, they are conservative, but they can still get some return from what? From the stock dividends, right? So there are two types of investors. But I think most young people like to buy what? To buy the capital gain stock, right? You're hoping the companies will, grow very fast in next few years, like the Google and Amazon's, right? But for some investors, they are more conservative. They will buy income yield stock. And then you may wonder, right, this calculation is not convenient, right? Every time you want to track dividends, and you must also track the price. So for the convenience, we can also use what? We can use this one. So this column called what? Adjusted close price. So what's the meaning of adjusted? Means adjusted the price with what? With dividends and also split and also reverse split, right? Some companies split one share into the 4 shares. Or they pay what? Pay dividends, right? So this will affecting the close price. So do some adjustment will be much more convenient to do what? Return. So now we will not use these two columns. We'll directly use this one to do the return, right? How to solve return. It's much easier, right? So you can say the beginning adjusted close price will be this one, and the ending price will be this one. So if you do the return, right, you can say you can get the same numbers as we have done in the last calculations, right? It's more convenient. So that's for return, right? So what's the meaning of return? I say the details, right? Based on your investment, $10,000, right? And also with about 50% return, right? Means you actually get what? Additional $5,000, right, in your account. So when you check your balance last night on June 24, you actually have what? $15,000, right, in your account. And this actual money comes from what? Comes from your return, right? That's the actual money you got, right, with this investment. Not bad, right? It's much, much better comparing with buy a house, right? Even you buy a house in California, right, or in the Manhattan, you can never beat, right, the stock return, right? Only thing you can beat the stock, maybe you're selling the drug, right? But drug is illegal, right? Only the stock can give you a legal return and such high number you can enjoy, right? But everything in the US, if you have some income, you must pay the tax, right? So you may wonder, right? Even you share a high return, but if the tax is too high, then it is not reasonable to do this investment, right? So what's the tax will be paid on this $5,000 gain? Let me show the real example. For example, when most students, you are single, right? And we assume you have the salary, what? $80,000, right, in your regular income. So how much tax you will pay for this $5,000? Based on the new tax reform, right? After Trump elected, right, he reformed the tax on the capital gain a lot. On the 2019 tax bracket, right, based on the long-term capital gains with the capital gain income less than $40,000, right? That's for this year's numbers, right? You will pay what? You will pay no tax, right? What's the meaning of a long-term capital gain? Means you must hold in stock what? More than 12 months, more than a year, right? So since the last September, you bought this Apple stock, right? You check the balance on what? On the June. So you're holding what? 9 months, not enough, right? Suppose you continue to hold for next 3 months, right? You meet this bar for the long-term capital gain, right? Then you will pay what? You will pay no tax, right? For the married couples, right? If you have the total capital gains less than $80,000 will be no tax. So this is such an advantage, right, for the investment, especially for this year, right, during the pandemic, right? If you bought some stock, right, and you're holding for the 12 months, you will pay the no tax, right? But what's the problems? Some guys like the trading frequently, right? You buy only, for the 3 months, you sell the stock. If you buy and sell the stock within the 12 months, not holding more than 12 months, then you must pay what? You must pay the tax, right? And then this tax for the short-term capital gains is treated as what? Ordinary income, right? Like your regular income from your, from your wage, right? How to determine this tax for the $5,000? You can say because your income is $80,000, right? It's fall into the bracket in this column, right? Suppose you are single, so you will pay the 22% what? Tax rate. So for $5,000 gains, you will pay what? $1,100 tax. So your pure capital gains after tax is only what? $3,900. And if you pay more investment, right, your marginal tax rate will be also increased to the next bracket. So your return after tax will be even lower. So you can see the big difference between a long-term capital gain and short-term capital gain, right? If you're holding the investment more than 1 year, right, consider the advantage of the tax treatment, right? I strongly recommend you to hold in the investment for longer time horizon, right? Not for a few months or few days, right? Because the tax difference will be such a difference, right, with your performance. Now we have the, some intuitions why we need to buy the stock, because you can share what? A high return. Even after tax, right, you still beat the market a lot by buying the stock compared with the other, financial investment, right? So how can we do the real investment in the market? If you have never experienced the trading before, right? So this is your opportunities to do a free trading, right? To register a free account on what? On a howthemarketworks.com, right? You can register this account, use your Facebook or Google account. Or if you don't want to release your informations, you can just, create a anonymous account by use any nickname you want. And you will choose student, right? So I give you what? $100,000 to do the investment, right? Even this money is not real, but every transaction is real, right? It's used the real market data, right? So it means you actually holding a imaginary broker account to do this investment, right? So I give you the link to register, right, for this, trading directly. You can follow these 2 ways to register your account, right? It's totally free. Once you can follow this link, right? The other one, you can register your account first, then search mYe contest with the search bar, right? You can also find our contest. So why I name this one as contest? Because we can do some competition, right, among these students, right? For the next 3 months, you can do this trading by yourself. Then on the December's, we can check who is the winner, right, for these tradings, right? The winner will win some real shares, right, if you beat all the others, right, in the contest. You can see here, right, I started a contest called mYe contest, and the trading date will be available from the July 1st to September, right? Means you have the 3 months to do the trading, and you can register this account, right, for this week, right? And you can buy any US and Canadian stocks if you want, and also US mutual fund. Everything's real, right? Only the money is not real. So why the money is not real? Because you have no experience, right? If you do a real investment, just beginning from now, it's too risky, right? But this time help you to do some training, right? To practice until you have familiar experience with the trading. I think it will be better, right, to do real trading afterwards. Right? You can also do some trading on what? On digital currencies like the Bitcoins, right? I know many students like the Bitcoins a lot, right? So it's a chance you also can trading the, the digital currencies, right, on this platform. You can do a short selling, day trading, right? But you cannot do what? Margin trading. Be careful, right? Why you cannot allow to do a margin trading? Let me tell you something about, right? The margin trading means what? Means you borrow money from the broker to do a trading, right? I know many, investors, right, like your parents, right? They maybe use a margin to do the investment, but it's not good, right? Because, for example, if you invest $500, however, you want to use a margin to buy more than $500 stock, right? You buy the double, right? You buy the $1,000 stock. Unluckily, right, one day the stock dropped by 50%. So what's your value in this account now? You see, if the $1,000, right, lost 50%, means there are what? There are $5 decrease from this account. But who will take this loss? Be careful. The broker never take loss. Only you as investor, you will take loss. So you will take this total loss by yourself only. So with your initial investment, $500, with this loss, you actually have what? $0 left in your account. So that's the risky of what? Margin account. That means you use the leverage. However, once the market, go to a downside, you will take all risk by yourself, right? The broker never share the risk. Be careful. And after you build this account, now you can do the trading on this website, right? You go to the, above of the link, right? You can see let's make a trade. You can choose the stock and ETF and all the other instruments available here, right? For example, for me, I buy what? Buy the GETS. That is our That's a US Global Jets ETF, right? So it's a stock, right? But why I call this one as ETF, I will give you some intuitions after we introduce, right, this trading technology, right? So you can specify how many shares you want to buy and also what's the price you want to buy. For example, I choose the market price, means I want to buy the stock as soon as possible, right? So whatever price available on the market, you will pay this price. So you will buy the 100 shares of the JETS with this price on the market. So my total cost will be in this one, right? So after I spending this money for my account, right, you will got these shares in your account, right? So that's how many shares I'm holding in my account. And after I purchase this one, the price dropped by 1 cent. So I have what? 50 cents loss, right, for this investment after a few seconds, right? You can see my total value in this account here. And then you can also double check your open positions in your portfolios, right? If you are worried, maybe your order is not, processed sufficiently or not on the right time, right? So what's your real positions? You can double check your open positions in your account. Everything is real, like what you have in the brokerage account. Only money is what? Fake, right? So take this trading serious, right? Can help you to practice the trading more more scientifically, right? What's the meaning of scientifically in the finance means you want to be more more conservative, right? More, cautious to do the trading, right? You can see here, right? I can also buy the Google stock to specify what? Limit order, right? What's the meaning of limit orders? You may wonder the price is too high for Google right now, right? Because it's almost what? $14,035, right? It's out of your budget, right? So you want to specify a special price for this one to access, right? For example, I think the Google price will going down in the next hour. So I will specify the price forward for the $1,300. So until the price falling down to this price, your order will be accessed. Right? If the price continue move up, your order will be never fulfilled. Right? Until price going down to touch this price level, then your order will be fulfilled. You can also specify you want to make this order good until the cancel, or you want to specify the order will be only valid for today. If you want to specify the price good until cancel, then you don't need to monitor the price anymore. right? You can also do the other works, right? And the computer will help you to buy the stock anytime you want, right? With the order you specified here, right? That's called good until cancel order. And this is very popular, right? Because not everyone can, stay at the computer every time, right? So this one can help you to access order you want, right? With a specified shares and specified price level. You can try this one at home. You can always play around, right? There are different actions, right? Different symbols you can tap, right? Different price you can change, right? If you play around with this platform, you can see a lot of materials, right? Will be very useful, right? For you to study, right? For these trading platforms, right? For example, I specify the price for 14.30, right? So until the price reach to this level, my order will be never fulfilled. And sometimes, for example, during the pandemic, right, we know the market will go into a downside, right? And you want to take the chance to capture some return, right? You don't want to wait until the market recovered, right? You also want to get some profit with the market downside. How can you do that? You can do what? Short. What's the meaning of the short? The price going down will be actually good for you. Right? The lower of the price, you will enjoy what? More profit. Right? So what's the meaning of the short? You actually what? You actually selling the shares, right? Borrowed from what? From the broker, from brokers, right? So you selling the shares from brokers, you need to buy back, right? To pay the brokers. So if the price continue goes down to $9, right? You selling the shares to someone else for $10 now, but you buy back only for $9 in the future, you make $1 profit for every shares you get. So if the market go to the downside, you can also use a short position to enjoy the profit, right? Especially during the financial crisis, you expecting the price will going down quickly. So why not short the stock, right? As many as possible if you want, right? For example, the Gap, right? Gap is a popular brand, right? To buy the fashion merchandise, right? And we know during the pandemic, like Gap sales is very poor, right? So why not short the Gap stock, right? You can enjoy the profit. And eventually, right, after you do these transactions, you want to check your history and you want to check the cost and you want to check how much balance you left. You can go to the My Portfolios to check your balance and holdings, right, in the account balance and also transaction histories, right? They will give you a summarize of your holdings and also the values you have, right, for this account. For example, based on my transaction today, right, I have my 3 stock in my portfolios, right, including the Google stock, right, oil stock, and air flight stocks, right, 3 stocks. My majority holdings in the Google, right, more than 80%. The other small fractions in these 2 stocks. And you can also compare these stocks with your watch list, right? You can choose the watch list to do the comparison, right? By adding more stock into the watch list here, right? And also you can compare with what? Benchmark, right? With the stock market, right? If your returns is better than the benchmark, right? You beat the market, right? And also for the students, if you want to do more study of the stock, right? To get more data, right? Not just on the howthemarketworks.com, you can go to what? Yahoo Finance, right? Yahoo Finance is public access website, not like Bloomberg, right? Bloomberg is only if you have the terminals, right? And you have access, right? So if you want to get regular informations, right, to do the individual investment, I suggest you go to what? Yahoo Finance, right? Yahoo Finance providing many information about companies, including what? The beta, right? This is for risk, right? The higher of the beta, the higher of the risk for the company. And also you can go to the what? You can go to the chart, right, to see the performance of your stock, right, by compare with the other companies. For example, I put the 4, index in my comparison here, right, including the Apple stock, right, Google stock, whole market index, S&P 500, S&P 500, Standard & Poor's, 500, the whole market index. And this one's Amazon stock. By the comparison, right, you can easily to tell which one's the best, right? And since the January 1st this year until now, you can see Amazon performed much better than the other investment, right? You can see Amazon generate what? Almost 50% return, right? And then the other two is not bad, right? Compared with the other, candidates, but still better than what? S&P 500, right? If you look at the other companies like the other companies during the pandemic, right? Most companies not even not recovered, right? But our technology companies performing much better than regular companies, right? So if you happen to hold in Amazon's, right, since the January 1st this year, your account increased a lot, right, during this year. And for students, right, if you want to go to the financial major in the future, you can also study what? The financial data, right, from what? From the three financial statements, right, from the income statements, balance sheet, and cash flow statements, right? And you know how to handle this data, right? Use the financial ratios. So I will not go to detail, right? So if you have interest, go to the detail of these studies. You can go to my website, right? I'm providing the detailed study of these financial statements, right? So for example, for accounting persons, right? You will study what? You will study the profit, right? Turnover and the financial leverage, right? So I will not go to detail for this part, right? And also, if you have the chance, right, enrolled in our investment course, right, we will use the Bloomberg terminals, right, to study what? Stock valuations, right? Use the cash flows, right? So basically, you can use the model to evaluate, right, a stock, right? Use the potential cash flows, right, from the Bloomberg terminals data, right? So I will not go to detail for this part, right? You can follow up with this part, right, in the future. And for this account, right, this free account, I help you to create some assignments, right? I know maybe it's your first time to do this trading, right? So you want to do some study by yourself. So I create this homework for yourself, right? So you can study how to do the trading, right, on this website, and also how to use this website, right? You can use the navigation of the website, right, to watch the video and follow the tutorials to do the trading on this howthemarketwork.com. Right? Everything will be free, right? And you can follow this topic to choose the topic you want to study, right? And do the trading by yourself. And before this webinars, right, I think the host, Grace, asked me to introduce some brokers, right? Because many people want to do real trading eventually, right? So what's the best brokers, right? There are many brokers available, right? Especially during the pandemic of the COVID-19, right? Many people want to buy the stock and sell the stock. So the broker becomes more popular during this time, right? So there are some brokers I want to recommend, right? One's interactive brokers, right? So now there's no commissions for every trade. And you can have the free commissions for every transactions, right? In the last 2 years, right, many transactions on a brokerage account, right, they charge some small commissions. But with the, many shares to do the trading frequently, it will be not economic, right? Now they have what? 0 commissions for the tradings, right? So that's very good. And also personally, I use this one for my own personal tradings, TradeUp. TradeUp is a company belong to the tagger companies, right? They have a special promotion right now, right? There will be no commissions for every share of the stock. And also, if you make a deposit to this account, right, you actually have some cash bonus or cash credits for your account. For example, I deposit $3,000 in the first month, and I got what? I got $50, right, in the next 2 months, right, for this deposit. If you deposit more, you have more cash rewards, right, for your account. And also, you have the free stock if you make a deposit, right? So the first month you can enter into the some random lottery. They will reward you with random shares of the stock. For example, the first month I get a share called NEO, right? So I will mention something about NEO later, right? So basically you can get a free stock by creating this account, right, on these brokerage companies, right? I trade in the stock in this account, right? But I don't trade in the options in these companies, right? Options not free, right, in this account. So if you only trade in the stock, I highly recommend is a brokerage companies, right? Their fees very low, and also this fee is required for every companies, right? This one is not something hidden, right? It's actually charged by every companies, right? Only the commission part, right? You can see is free, and also they have the free stock and the what some cash rewards, right? So I highly recommend these companies, right? Next one, before I recommend real stock, let me give you some basic principle of the investment, right? This one can be very intuitive, right, in the future investment. The first one is diversifications, right? Before today's webinars, I actually discussed with the Miss Ann Zhang, right, the host of today's webinar before, right? So as I asked her, what is diversifications? She understanding this one very good, right? She said, right, don't put all eggs, right, into one basket, right? Means if you can, allocate your investment into different stocks, right, it will be what? Less risky by put all the money into one stock, right? For example, if you put all the money into one stock, even this stock generate a stable return, but your account will be still performing worse than one investor do a portfolio diversifications. For example, these investors split, right, allocate his money into the 5 stock. Even the 3 of them performing really poor compared with this one. However, with the allocation into different stock, right, you can see the eventual balance will be still beat this one much better, right? So that's the benefits of what? Diversifications, right? Why the diversifications can generate additional profits, right? In the finance, we know something called covariance, right? We not mention this one in here, right? Because it's something about mathematical part, right? But we know diversification can generate what? More return and reduce what? Risk. For example, if you only buy the stock in what? In a consumer fashion sectors, right? Or go to what? Or go to the restaurant sectors, right? You know these 3 months, right? These 2 sectors perform very, very bad, right? Compared with the other technology companies, right? If you put the money in these 2 sectors only, you will lose half of your account values. However, if you put your money into more sectors, for example, into the technology companies, pharmaceutical companies, right? Your performance will be much, much better, right? That's the diversification benefits. And also we can do some what? We can do some regional diversifications, right? What is the regional diversifications? You not put money, right, into one country only. You can buy the stock in the other countries, right? For example, the US actually not control the spread of the COVID-19 very good, right, compared with the other countries. For example, China, right? China control the virus much better, right? So if you think of China with less risk, you can also buy the stock in the Chinese market, right? Actually, some companies, right, they also selling stock in the US market, right? For example, like the Alibaba I mentioned before, right? And also the other companies, right? Like the NIO, right? I just mentioned, right? All these companies from China, but they selling the stock in the US market, right? So if you think the US market is too risky to do investment, why not diversify your portfolios with what? With some foreign company stocks. Next one, time, not timing. What that means? We are not a magician. We're not sure. We cannot guess, right, what time the market will perform good, right, compared with the other time. For example, if you put the money in a 1999 until 2018, right, you never make a change, you never withdraw the money, right, then your whole portfolios will generate what? 5.6% return every year, right? And your balance will be more than doubled, even 3 times of your original investment, right? However, if you try to guess the market, you want to do the timing, right? and you happen to miss the 10 best days for these durations, you will only have this return, much poor, right? And also, if you miss the 60 days for this range, right, your return can be even what? Negative, right? So that's why we need to hold in the stock for the long term, not for the short term, right? The last principles I try to emphasize is what? Impact of what? Loss. Never underestimate the downside risk. For example, if you lost 10% of your account, you want to generate what? 11% to what? To go to the original level, right? If you lost 50%, you want to generate what? 100% return to the original level, original investment values. So you can say, even you lost some money in a small percentage, you want to work even harder, right? You want to perform even better, right? To go to the original levels, right? It's not easy. So try to protect yourself with what? With a downside what? Risk. So that's a Warren Buffett famous rules, right, for investment. Never lost the money, right? The rule 2, never forget what? Rule number 1. So I think this one is most important, right? Especially you are young, right? You don't have too much capital to do investment. So try to protect yourself with the downside risk, right? Not take too much loss, right? Especially not use the margin account. Finally, go to our real stock recommendations. That's my personal thoughts of the stock pickups, right, in the next year. So this is just my personal thoughts, right? Maybe it's not, rational based on the other investors, right? This is just my personal recommendations. The first one, I recommend this one called JETS stock. I'm holding a large amount in my account for this stock, right? JETS. JETS, right? So what's this stock? This is actually not a stock, but a what? ETF, right? Exchange traded what? Fund, right? So this is actually a fund with many stock into the portfolios, right? So you can buy this one and sell this one easily, like the regular stock. But this one is not a pure one stock, but a portfolio of stocks. And the fees is very low compared with the stock and the mutual fund. So why I choose the JETS? Let me explain this one here. Before I purchase the JETS, I ask myself 3 questions. The first question is, will the healthcare crisis end? Our questions definitely is what? Yes. Sooner or later, depends on when the vaccines will become what? Available. And will the people travel in the future? Yes. We are social animals. We will travel, of course, in the future, right? With a long distance. Last one is any alternative of the flights in the next 5 years for long distance travel. No alternatives. If you want to go to the foreign countries, only thing you can take is what? Is the flights, right? So based on this answer to myself, right, I think the air flight companies will be finally recovered, right, in the next year. But why not by the United Airlines? Why I not by what? American Airlines or the other air companies? Because I'm not sure which companies will go to burst, right? But I can buy something with the diversification to reduce risk. Is the JETS, it's ETF, right? With many air flight companies in the portfolios. And also I cannot look at the screen all the time to figure out what's the best time to enter, right? I'm not a good person with the timing, so I will sacrifice of my time to get this, potential return. So eventually I purchased what? JETS. In these JETS portfolios, you can see what they have in these portfolios, right? The JETS holding what? 10% in the Delta, right? 10% in the South price airlines, right? 10% in the UA. So actually they do the diversification very well, right? Into different air flight companies. Even one company maybe go to bankruptcy, unlucky in the future. However, I don't think all the companies will go to bankruptcy, right? So I will not take too much risk by this ETF compared with by the one single companies, right? And also, what's the potential risk for this investment? The Buffett used to dump all these airline stocks on April, right? So the price is very cheap for these jets, but now it's already increased by 40% since the April. So my options on the risk here, the first one, right? The entire airlines can be go to nationalized. If this one happened, right, then the jets will be not viable. However, it's very, very impossible, right, based on our experience. Right? Even during the financial crisis on 2012, our government has no attention to nationalize what? Our airline companies in total, right? Second, can be the virus lasting forever? It's impossible. Maybe it can be in a long period, but not forever. Right? And also based on the experience in China and Italy, right? We know we finally will control the virus, especially with the vaccine next year. Eventually, people will do the travel, right, to the foreign countries. So I think the risk of this ETF is very low, right? So I hope these jets can, generate a high return for me, right, for the whole year, right? I will hold this one for the whole year, right? So I think the jets will be eventually doubled at least, right, in next year. So bottom lines, don't borrow the money to the investment. So please don't use the margin, right? You may lose the time, however, you will never lose every penny of the money in the end, right? So that's my suggestion. Next one is also for the downside protections, because we know for today's data, so you can see the US COVID-19, right? The new case increase quickly, right, compared with the other countries, right? You can see the curve for the US is the orange one, and the green curve is for Brazil, right? And you can see the US increasing much quickly, right, compared with all the other countries, right? So we are worried maybe there was possible second wave of what? Spread of the virus, right? If we have the virus continue goes up, right, maybe our economy will be shut down for some states again, right? That's the potential risk for our investment. So how can we hedge this risk and also make some more profit, right? And I suggest you to buy something called what? GERM. GERM is also an ETF, but this ETF including many vaccine companies stock. For example, Moderna, right? Inovio in the past 3 days increased by 40%. The price increased by 40% in the last 3 days. And also Novavax, right? The stock increased by 50% in the last week. And Moderna is the first company to do the human test of the vaccine, right? But you are not sure which companies will finally produce the vaccine effective, right? And will be adopted by the Trump, right, to give to our peoples, right? You are not sure which one will be eventually successful, but you know at least one of these companies will be worked out, right? So why not buy the whole index, right? So you'll not take too much risk for a single company. For example, if the Inovia failed the final stage, right, their stock will be very risky to buy. But for the whole portfolios, like diversifications we mentioned, the risk will be very low, right? So I also holding a GERM in my portfolios, right, for the vaccine companies. Last one, I think you are more familiar, right, with the Tesla stock, right? Elon Musk is a guy very good with what? Promotion and marketing, right? You can say, once the rocket, right, go to the space, right? And you can see the Tesla stock going up quickly. But you think the price may be too high for you to purchase because one shares is almost what? $1,000. So what's the other choice you can have? There are two other companies doing the same things like the Tesla, but the price is much cheaper. One is the NIO. But NIO is a company in China. They also producing what? Electronic cars. Right? The price is also very cheap. Right? And then their growth is very similar to the Tesla. Every time Tesla goes up, NIO also goes up. Right? The last one I mentioned is here, is the Workhouse. Right? This is for electronic van. Right? In the past week, the stock grows by what? About more than 50%. Right? So these three companies is similar concept, but in different countries, right? And also with different, customer base, right? NIO is more likely in the Chinese market, right? But Tesla is in a global market, right? This one is more popular, but this one's maybe you can buy with a cheaper price, right? To expecting higher gains in the futures. The last one, right, I mentioned here, right, is the for technology companies, right? Most students, you are very interested in the technology companies, right? So I have the three stock I mentioned in my class at the beginning of these semesters on the spring, right? In the January, I recommend my students to buy the three stock in their portfolios. One is Google, one is Zoom, right? One is Amazon, right? Amazon, of course, right? You know this one very well. Be careful, Amazon is not an e-commerce company, right? Actually, the Amazon is what? Technology companies, because Amazon is also good with what? Cloud computings. And also Amazon's, right? They providing what? Artificial intelligence for data studies, right? Many scientists in Amazon are data scientists, right? They try to use the data to generate what? More profit, right? So Amazon is a technology companies, right? So that's why the Amazon stock keep going on, right? Keep increasing, right? Because it is a technology companies, a technology giant in the US, right? Next one is Zoom. In the market, there are so many video communication companies, but Zoom is the most popular, right? Most companies and most group, right, in the foreign countries, they also use the Zoom for the telecommunications, especially during the pandemic, right? So Zoom is also the choice for the portfolios, right, since January of this year. Last one is Google, right? And I know everyone know Google well, so I don't want to go to detail for Google, right? If you believe Google will continue growing, right, in the future, and even the price is high, it will be still a chance for you to buy the stock to holding long term. Don't forget, right? Like I mentioned, if you're holding stock more than a year, right, the tax now is equal to what? 0, right? Use this chance, right? This is a very good chance for now to do investment for long term, right? To enjoy the tax benefits. So do you have any questions? So we can answer your questions, follow my presentations. So you can either type the questions in the Q&A, or you can just maybe talk to the Miss Dan, right, about your questions. So we can answer your questions one by one.
Yes, and just a reminder again, you can find the Q&A section at the bottom right-hand corner of your computer screen.
Oh, I see one student or one attendee, right, asking what's different between a small stock and a large stock. So the small and large here, right, actually means what? Means the market what? Cap, right? Market cap. So means the total size of the stock, right? Some companies with more than 1 billion stocks, right? Some companies only have a few $1 million, right? So with the small size of the market cap, we put into what? Small companies, right? Small companies is usually are young companies, right? With startup companies, but these companies growing faster than the matured large companies, right? In the US history. Okay, so let me see the other questions. What cheap stock do you recommend us to buy? For cheap stocks, right? Depends on what you want to buy in the future. You want to enjoy the capital gain, or you want to get the the dividends. For example, for a cheap stock, I just mention the two stocks before I go to this slides. One is what? Once new, right? New is only $6.91 per share, right? And also for the workhouse, right? Even this one grows very fast, only $9.65 per share. And also for the GERM ETF, and also the JAS ETF is also very cheap. The JAS ETF is only $18 per share, right? So if you're spending, $1,000, you can buy what? You can buy more than, 60 shares if you want, right? Why not, right? The air flight companies will eventually recover, right? So if you can buy the jets by holding for at least 1 year, I think you can see a good return eventually. And how about the others? If I miss your questions, you can tap the questions again, right, in the Q&A sections.
So another question I saw on the Q&A section is that online on Yahoo Finance, I saw a bunch of articles on Motley Fool. So would you recommend that?
Motley Fool, you can follow these recommendations, but you should do your self-study by yourself, because some Motley Fool recommendations is only from the unprofessional advisors or some individual investors, right? So their opinions may be biased, right? So you need to study by yourself to see these suggestions is reasonable or not, right? So before you make a real investment, try to do some thorough study of the company, right? Is this company occupy the whole market well, right? Is the company on the upside of the market or go to the downside? For example, even the name macros and the stock is very cheap, but usually not many people willing to buy this stock, right? Because we know the retail companies, right, now is go to the downside. For the context, you can only buy the American and Canadian stock, but American stocks only including stocks from the foreign countries. They are listing in the US market. In the NASDAQ, right? Well, there are two stock exchanges in the US market, right? One is NYSE, New York Stock Exchange. The other one is called NASDAQ, right? NYSE is for the major and the big companies, right? For NASDAQ is for the small technology companies, right? And for the NYSE, you can buy the stock from the foreign countries, right? They are the huge companies also, right? From the India, from China, and from the Canadians. And for NASDAQ, you can buy the small companies, right? Especially IT and the pharmaceutical companies, right? There are so many to choose, right? From the foreign countries. So even you can only buy the American stocks, doesn't mean you can only buy the American companies. You can also buy the foreign countries stocks, right? They are listing in the US market.
Another question that the participants have is, for the ETFs, how do they decide what percent to distribute to each of the companies? Are there different ETFs for the same industry sector that distribute their portfolios differently?
Yes, I think it's a very good questions. The ETF, they can distribute different companies with different weight. For example, right, let me show here, right? For the air flight companies, only one ETF available, right? There was no other choice until now, right? But for the other industries, there are different ETF. For example, for the oil company, oil industries, right? The oil now is very cheap. It's also a good chance to buy oil, maybe, right? There are two different index, ETF, right? One's USO, one's UCO. And the UCOs are leveraged ETF, right? It means they actually, leverage their investment. So with the oil price increasing by 1%, UCO will be increasing more than 1%. Also, if the oil go down 1%, UCO will be lost even more. But USO is most likely follow what oil price, right? They purchase the oil futures, right, in their portfolios, right? So this is for the oil ETF, right? You are right, right? For different industries, there are a bunch of ETF you can choose. Just compare the ETF carefully, right? How they allocate their money into different companies, right? Maybe make a difference. Should I trust the Yahoo Finance articles? So every articles, whatever in the Yahoo Finance or even in the Bloomberg, right? These articles is written by the human, right? Human is not what? Objective, right? Can be sometimes what? Biased. So only the data, right, can tell the true story. So before you listen to the other opinions, right? Try to follow data, right? Try to follow the historical price, right? To make your decisions.
And then another question people had is, when day trading, is there any way to know when stock will drop ahead of time without doing a thorough research of the company itself?
It's not easy. However, you can make some reasonable guess. For example, you can watch the news frequently, right? For example, if Trump mentioned there will be a trade war between the US and China, or US between US and the Europeans, right? Most likely next day, the whole market will going down, right? That's a macroeconomic events will affecting the whole market. And also you can watch the company news, follow company news in advance. And also you can go to a company's official website, right? You can see some, earnings report and also earnings discussions, right? Then you can, make reasonable decisions to holding or selling the stock if you want, right? For me, right, usually I watch what? Watch the, the financial news, right? Either on the Bloomberg, right? Or you can go to the any, financial TV channels, right, to watch the news, right, to keep updating about some certain companies and whole economic conditions. And early on, you mentioned the online stock competitions. Can you share a link? Yes, I will send a link to the Grace, Miss Kai, right? So she will share a link with you guys, and this link is for the our competitions for next 3 months.
And going off of that, so whatever is being presented in the video or seminar today, it will be recorded and then reposted on our website. So if you have anything that you didn't get down, you can always go back later and rewatch the video of this seminar.
Another question is that, do you have any suggestion how many stock you should have bought and once? So I suggest you buy the stock, right? Less than 5 or 6 companies and the first time. Don't buy too many company stock because it's not easy to follow up, right? So I suggest you only buy the 5 company stock at the beginning, right? If you are more familiar with the tradings, you can hold in more company stock, but don't buy too much. Don't buy too much, right? It's not easy to follow up, right? Because you need to watch the news for every company, right? To try to get updates, but it's not easy to do that. Should I buy the stock during or after stock hours? I suggest you to buy the stock during the hours, because after stock hours, the stock will be more what? More volatile. That means the price will going up and down more frequently. You cannot predict, right, how price change after market. So please place your order during the stock market hours, not after stock market close. So what do you think about the current stock market? I think for now, for next 3 months, right, the market will be still going down. Maybe with the short-term fluctuations will be still going down because our president won't be re-elected, right? He wants to guarantee our market performing, better, right? And also, with our virus controlled and our economy go to recovery path, right? Our economic market will still growing, up. What about Canadian Air Canada's? Do you recommend buying it? Like I mentioned, if you buy only one company stock, it will be very risky, especially for the flight companies, right? We are not sure which company will go to bankruptcy. So I prefer you to buy the air flight ETF, not buy a single company stock. How do you find the perfect stock to purchase? Like we always mention there's nothing perfect, right? Only something better than the others, right? So maybe you can, choose some companies you believe it will growing in the next few years, like Amazon, Google, right? And holding for long term. And at what point do you believe the people will trust in the market more and recover to the pre-virus condition? Very good questions. So I follow up the market in the recent 3 months since March. I know most recent stock going up actually is pushed by what? By individual investors. Individual investors. So most stock purchased after financial crisis of the pandemic, right, is the individual investors. Not many institutional investors purchase stock after March. If, right, the whole institutions also go to the market, I believe the market will be even stronger than right now, right? Because like the Warren Buffett, like the JP Morgan, they are still worried we can have the second, downside risk this year. So they not enter the market until now. If they decide to enter the market will be even stronger than right now. So you can follow up with what? With institution, right? Ownership, right, in the stock. If you see one day institution ownership, right, in a market growing very fast, means it's the time for us to holding and buy more stocks, right? Because even institutions believe the market will be recovered, right? Then it will be, double sure, right? You will have the, positive return. When will the competition end? Competition will be end after 3 months from the July. So that means that September's the competition will be end. However, even after competition end, you can still use this platform to do the trading, right? So on September's, we will rank students, right, in this competition to see which one perform the best. But this trading will be always valid for you to use in the future.
So another question that people have is, what trends are you seeing in the various sectors of the current market?
What's the chance of what?
The trends of the various different sectors. So I know, for example, as you mentioned earlier, you thought very positively about technology and stuff.
Yeah. For the sectors, I believe the some sectors will be weaker, right, during the whole year, right? For example, some of my students, they bought a cruise company stock because they think the cruise companies already touched the bottom. However, stock continue going down, right? And also like the consumer consumption sectors is not very strong, right? So try to avoid these sectors, right? Even you believe this one will eventually recover, but in the short term will be too risky to enter. So I believe you should be better to buy something more promising, right? Like the tech companies, right? And also some companies like the Johnson & Johnson, right? These pharmaceutical companies, right, will be still robust, right, in the medium terms. And for some sectors, like the fashion sectors, right, like the Gaps, right, and also like the American Eagle, right? I think most young kids like buy these brands, right? This will be still perform poor, right, in the short term, because now people buy the fashion goods online, right? There are so many choice, right? So many discount, right? Not one single brand can win the other companies well, right? So I don't think you buy a single company stock will be promising in the short term. So try to avoid these companies in short term.
So we were also wondering other websites where we can learn how to invest stocks on or gain more information on this topic.
There are many websites to get information about stocks, right? Yahoo is the most popular and public, right? And there are also the other companies and also platforms you can use. For example, you can go to the Bloomberg.com, right? So this is not terminal, just the official website, right? You can see the different sectors performance, right, for each stock. And also you can go to the Google Finance, right? Google Finance is also providing the financial information for different companies like the Yahoo. Google Finance.
Another question is there a certain threshold for beta value of stocks that we should try to stay below?
For beta values, beta values are what is a measure of the risk, right? But as you know, the higher risk usually also generate what? Higher return, right? So you cannot always, choose a company with very low beta, right? Even the beta low means lower risk, but always returns will be also lower, right? So you must to make a compromise between the risk and return, make a balance, right? For example, the ShopRite, right? ShopRite, right? And also the other, retail companies, right? The grocery companies, right? Their beta is very low, right? Risk is also return is very low for these companies, right? But in the same industries, there are also different choice. For example, for the wholesale companies, you can see the BJ and what? Costco. I know you guys know this name well, right? Both are wholesale companies, but BJ has a higher beta than Costco, and BJ also generates what? More return than Costco in a recent quarter, right? So if you happen to buy the BJ, not buy the Costco, actually BJ perform better than the Costco in your portfolios. And what category should you risk? I not. Let me check the other questions. How am I supposed to choose if most online are essential companies, if most are and are real expensive cost? I'm not sure what do you mean for the cost. Cost means the price of the stock, or means if you want to the trading cost is high. If you think the price is high, however, just like the Amazon, right, stock is more than what? $2,000. But also Amazon are still growing. So if you only purchase one share, it doesn't matter, because if a stock continue robust growing, why not buy this expensive stock? Even a stock is cheap, like like you heard, Hertz, right? Hertz is a company for the rent of the cars. The company stock is only less than what? $2 before. You cannot determine which company is better based on the price, because the Hertz is almost go to what? Bankruptcy. So like we buying a house, right? If you're living in the Manhattan or in California, the more expensive of the house, the price actually will be more easy to appreciate in the future, because people are willing to buy it, right? So the cheaper of the stock sometimes is not good for you to buy. However, more expensive of the stock maybe even means more opportunities in the future, right?
Another question that people had is, should they ignore all the stocks that are not able to be used at home during this time?
Depends. I cannot say 100%, right? But you can based on a company by company case, right? Even in a poor industries, maybe one company is popping out, right? But in a good industries, maybe one company will go to bankruptcy. So that's not 100% chance that you can always win, right? So you should do some diversifications, like I mentioned.
And I believe we were a bit confused on the meaning of long term. So you mentioned earlier that long term is holding a stock for 12 months. Does that mean during that period of 12 months, no trade is allowed at all?
The trading is allowable. However, if you're trading in the middle, right, you will pay the tax, like I mentioned, right? It means you holding not longer than 1 year, right? So you will charge the short-term capital gain tax. If you're holding more than 12 months, then sell it, right? You will pay long-term capital gain tax. So it depends on you, right? If you think the price is too risky to hold, you don't want to take the much further loss compared with the tax, right? So why not just sell it in the middle, right? But if you believe eventually the price will recover, by the tax will be give you advantage, so you need to hold in for at least 12 months.
So, as an expert in stock investment, do you have any tips about selecting between mutual funds to invest in?
Mutual fund, there are so many mutual funds, right? You can go to Vanguard, right? Vanguard.com to actually shopping different mutual fund. But why I don't suggest the mutual fund? Because the mutual fund charge a high management fee. In the recent 10 years, but in the past decade, less and less people to buy the mutual fund, right? Because the mutual fund even not beat the whole index very well, right? And we use what? We use a passive investment. We buy the index fund, right? We buy the what? We buy the ETF, right? This fund, there's no human to manage this fund actively. So the management fee is very low compared with the mutual fund. But performance are even what? Are even better. So the mutual fund actually lost the appealing, right, in the recent decade. And many people working for the hedge fund and mutual fund actually lost a job in the past 5 years. And one of my, colleagues' son, right, he graduated from the Duke, right, and he used to work for the mutual fund in Manhattan, but now he lost the job, right, in 2 years before, right. He now works for financial advising companies, right. So there's a trend, right? More and more index fund and ETF will replace the mutual fund in the future. Yeah.
Since we are a bit short on time, we'll be taking two more questions for this presentation. The first of which is, for a younger investor, where would they start? Or if you wanted to gift stock, what would you choose?
For the youngest investors, because you have a long time, right, to use the money, right, and you have the more chance to do the investment than the others, right. Most people, like our parents, right, they don't buy the stock directly, right. Maybe they use what? They use the IRA, right, retirement account, right, to use the fund in IRA to buy the stock through their financial advisor. But if you were young, right, you use your own savings or maybe use your gift money from your parent to do the investment, I suggest you to buy the stock, right, even consider forward longer and longer terms. For example, right, you saw one, companies now is emerging and young stage, and then this company will growing steady in the next 3 decades, right? The products will be more demanding in the future, right? So you can buy this company stock for longer terms. For me, right, I suggest you to buy what? Buy some cloud computing companies, because these companies is on the trend, right, in the next 5 to 10 years. Cloud computing will be more and more popular, right? And also some biotechnology and pharmaceutical companies, right? In the future, people are more concerned about their healthy problems, right? So the pharmaceutical and biotechnology companies will be more popular. If you happen to find one companies, there are so many property rights, right, in the pharmaceuticals, right, in the drugs, right? So buy these companies to holding longer terms.
And our last question for today is, when looking into category, of stocks that you should buy, what should you pay specific attention to? So what should you specifically research in when you're trying to figure out what kinds of stock you want to buy?
For specific companies, right? So usually I will first try to understanding what's the product of his company producing, right? What's the business model? The business model is very, very important. Is this model unique to these companies, or also available to the other companies, right? If the model is only specific to these companies, right? So the other rivals is not easy to replicate these companies' products, right? Then this is the best companies you will buy, right? Because this one's very unique, right? No one can compete with this company in the short term, right? For example, I see one company, right, recently go to IPO, right, called GAN. I'm not quite sure about this ticker. Just search for that, right? This company is providing the service to the casino, right? You know, the casino, people go to a real casino to buy and to do some gambling. But this company is providing the what? Service, right? To move the gambling from the real casino to online, right? So during the financial crisis or the pandemic, right? If people want to gambling online, only this company can provide a service, right? It's very unique, right? So these companies were going up, right? And after I decide this model is unique for this company, then I will go to their financial side to do more study, right? What's their revenues comes from, right? What's their profit margins, right? And what's the leverage? What's the financial leverage, right? How much debt we borrowed, right? How much finance we raised, right? And also, I will consider about what their management, right? So there are so many things to consider. But the basic steps: first one, business model; second, financial studies, right, on their financial statements, right? That's the major concern for me to choose a company for the long term, right, for specific companies. Yeah, that's it.
Unfortunately, that's all the time we have for today. Thank you, Professor Liu, for sharing your insights. I know I learned a lot about investing, and I'm sure we can all take away something from the presentation today. I personally can't wait to see how the initial $100,000 in my investment account will bloom after learning today's knowledge. If you liked today's seminar and want to learn more about the mYe Beat team and how it got started, or even join our team to create more events that will benefit the youth in our community, you can do so by joining in for our virtual open house this Saturday, which is June 27th at 7 p.m. Eastern Time. You can sign up on our website or access it through the link provided on the presentation that Professor Liu has pulled up. And we also look forward to seeing you in our next live seminar, which is how to make music through GarageBand, which will also be displayed on the screen above. The event is taking place July 11th at 3 p.m. Eastern Time. So as you can see from the screen, if you want to join, you can take a screenshot of that and you can sign up, and we'll be glad to see you there. Thank you for your participation, and thank you, Professor Liu, for taking the time out of your day to help us learn more about investment. And have a wonderful evening.
Thank you, guys. Take care.